So let's cover the best and worst predictions by the big skinny, and the ones that were wrong, I'm 100% blaming on you, Dodd. They're all your fault. I should, yeah. As the intern, I had shitty research from my intern. That's why it went bad. But all right,
I'll stop begging you to take my ideas then. You know.
All right, let's go through these. Again, I noted some of them. We're not going through all the things we got right because a lot of things worked out well this year, but we did bang the table on a certain number of predictions that most people thought we were a little bit crazy for at the outset. Do you remember what, from your recollection, Dodd, what do you think was the one that I went the most adamant about? Let's start with market calls, right? So just broad, general-based economy, market. Anything stand out to you that you thought we were pretty adamant about?
I think mostly about the recession, that we're not in a recession. I think that, you know, to me stands out the most. But
yeah, I think for me, it was just arguing against the tariff tantrum, that the stocks, you know, the end of the world was coming because these tariffs were going to be put in place, and that Liberation Day was the beginning of a nasty, prolonged bear market. We showed this chart back then that was basically showing how reliant China is on the United States, and that they couldn't make up the difference for a 77% drop in exports to the U.S. by shipping those, I mean, whatever those products were. Like, we can say some of good quality and some of inferior to the rest of the world. And that's exactly what we saw happen. Saw China trying to offload their goods in Latin American countries, but they couldn't do it enough. And lo and behold, Xi Jinping had to come to the bargaining table to talk with President Trump and figure out a path forward, and the markets really reacted positively once that inevitability became real. So we were right that the tariff tantrum was completely unfounded. We were also right, as you mentioned, about the recession, but also sentiment. I want to talk about sentiment before we get to the recession call. We shared a lot of different sentiment readings to try and educate the listeners. Like, hey, listen, when everyone thinks alike, everyone is likely wrong, to quote the great Humphrey B. Neal. And here we showed where bearish sentiment spikes and what happens to the market afterwards. And like, it's up and to the right. There's only been one or two instances. If you look back in the 07, right before the financial crisis, there was that one spot where bearish sentiment was actually wrong. Everything else was a contrarian indicator to go long and keep buying stocks.
All right.
Yeah.
Don't have anything to add there, Will.
Yeah, you don't. Don't trust your gut. If you're negative, it's probably a good time to buy. I mean, that's right. You know, the other Wall Street adage is, right, buy when there's blood in the streets, or Warren Buffett, be greedy when others are fearful and be fearful when others are greedy. But the other thing was liar, liar, spending on fire. There's a lot of mainstream press news that starts talking about consumer sentiment. It's in the tank. It's tanking. That means the economy is going to roll over. Here's the thing that refutes that every single time. Consumers basically say one thing. Hey, we're down in the dumps. We think the economy and the outlook sucks. We're not really optimistic about the future of our jobs and wages. And then guess what they do? They say one thing and they do another. They just keep spending. If you look at personal consumption, and that was always the tell. Now, I would freak out if consumers start saying they feel bad and start acting like things are bad, where consumer spending drops. So again, it's always data driven. That's what we do here at the Big Skinny, is forget the headlines and the feelings. Let's focus on the data.
It's like they're talking with their feet because they're actually spending money. You know, I think if you give, you know, people a survey or take a poll, you know, they're going to give you the answer maybe you think you want, you know, or you know, but they actually go ahead and, you know, are spending money, you know. So.
Yeah, exactly. And then same thing with the recession, right? I actually penned an op-ed for Newsweek, back in June of 2023, saying like, we're not headed anywhere towards a recession. And that still rang true this year. Because if you just looked at the fundamentals, if you looked at earnings growth, you looked at balance sheets of, you know, household balance sheets, right? Everyone made a big stink about total credit card debt. But if you looked at total assets towards total liabilities, we had never been in a better position. $20 trillion in household assets versus $10 trillion in liabilities. It's a lot of wealth that was created. We weren't going to a recession, even though the markets and the headlines kept saying, even to this day, recession on, recession off, recession on, recession off. Sorry, folks, that's just not happening. I'm not saying we're never going to have a recession again. I hope it's not for a while. But when we do, I think the state of the economy is such that it's going to be a short-lived recession. So.
And anytime we can get a Karate Kid reference in anywhere, it's always a good
sure, dude. It's long. Karate Kid and Tommy Boy for you. I think that's, top of the list. But other market calls, retail, right? Retail, we said that retail investors were going to be a more important component of the everyday markets. That's why we started this show to begin with, to educate, to inform, to participate, to collaborate with everyday investors like our listeners. And we've seen that. If you look at their average share and performance, you saw through the April sell-offs that total retail participation market share in the market was above 30%. And guess what happened? We kicked the butts of the hedge funds. If you look back at this chart we put together in April, the average hedge fund was only up 1%, the average retail investor 15%. So much for dumb money. The smart money looked pretty dumb this year by not buying the dip every step of the way. And I think this is a trend that continues into 2026 for sure.
100%. Retail revolution is real.
It is. It is, absolutely. All right, so from market calls to actual investment calls, I mean, we got some things really right. We're going to end on the things we got wrong. So let's go with stock calls. AI x Nvidia, right? We had an entire show, two shows that were dedicated to top stocks not named Nvidia. You tallied the results. Sim was the boldest from you. Yes, Chad, it was a big, bold call. I think we're going to bring up the performance of Symbotic. At the time, it was trading at about $19 a share when we first started talking about it. Only up 89% as of Friday's close, but it got over 100%. But Teradyne, 143%. Remember, this is the company that I proposed as the better robotics play than Tesla because they get 16% of the revenues from robotics, from commercial robotics. They're a test and equipment manufacturer. They test chips. They make sure they do what they're supposed to do. Up 143%. I don't have it in front of me, but I can look it up while you tell me something about these stocks that you thought stood out to see what Nvidia is up this year, because Teradyne may have trounced Nvidia. Year to date, Nvidia, 31%. So we smoked it, right? So look, if you look at the top, Tempest AI is kind of the cutoff, right? Everything above Tempest did better than Nvidia. Not saying you shouldn't have bought Nvidia. Nvidia had a good run.
No, absolutely. And, a couple of them, we switched out a couple episodes ago, a couple of weeks ago that we, marked, Wolf being one of them. We took the losses, right? Oddity was down about 40%. So we got that one wrong. But here's the point, right? What's it matter? Why are we bringing this up? We're not just, tooting our own horns here. I think the point is when there's a big trend in the markets and there's going to be an established leader in Nvidia and Apple and Alphabet, there's going to be a whole subset of other companies that do really well too, riding the same trend. And it's important for us to find those opportunities because, like we showed there, you can outperform Nvidia by finding those, what I called first derivative plays on the same trend, right? So Nvidia is the leader. What's the next level of companies that are operating in the same space, benefiting from the same trends? Mm-hmm. So we got that right. Apple, this is getting chippy with it's a good chart because I think it just underscores all those stocks that were on the previous slide are building off of the chip trend, right? Like semiconductor total shipment volumes, we're going north of 600 billion for revenue, close to 2 trillion shipments a year that it's going to be there. I would say this, it's a line that I've said before. Chips are the new oxygen of the digital economy, right? If oil was the oxygen of the physical old school economy, it's now chips. Everything's got semiconductors in it. 100%.
Are you willing to get a semiconductor in your head? Are you a Neuralink guy? Would you do that, Elon Musk?
I'd need a little more information, but I definitely would think about it.
Really? Have you watched the series Severance on Apple TV?
No, I haven't.
You might want to do that before you think about being Neuralink. So,
true answer there is probably no.
Yeah. So not going to ruin that for you. So,
but if it's going to promote me into the A block, then maybe I'll think about it.
Oh, all right. So there are conditions. You do have a price that you'll sell out for. All right. Chip him, guys, and he'll be here next Monday to download the things that I've forgotten. But Apple, I've called my ride or die stock. I keep saying this, innovate or die, not hardly. I always say they just have to iterate, not innovate. And I get brutalized every time I say it because they're like, that's the dumbest thing you've ever said. Of course, they have to innovate. No, they don't. Their businesses and their business segments are so big, and their install base at 2.4 billion devices doesn't necessitate them to come out with the next greatest and latest thing. All they got to do is come out with something incremental that everyone spends a little bit more on, and they make literally tens of billions of dollars more in profit.
Now, Apple's been in the news recently, Lou, just about losing execs, and then also about not being at the forefront of AI. What's your take on both of those things?
So losing the exodus of executives, I think, is instructive. I think you don't have any strong leader there. I mean, Tim Cook's a great operator. He's not a Steve Jobs, an iconic leader that's going to keep the top talent there. But yeah, the whole argument that they're behind in AI was the rub maybe 4 or 5 months ago. But then all of a sudden, Apple re-rated. It had a huge rally because everyone thought they were going to catch up. I do think that's the big threat to Apple's dominance is how do they handle AI. You remember not long ago, they announced a partnership to start working with Alphabet's Gemini to really to augment until they get their own AI off the ground. I would argue that Meta and Apple, there's absolutely no need for them to be developing AI in-house because they're not trying to solve the world's problems. They're just social media and digital media companies. They should just license their AI platform from one of the other bigs that's can spend and innovate much better than they can.
Not shaking in your boots at all.
No, look, it's a ride or die. I've owned it since $43 a share, so it's going to take a lot to convince me that Apple's going to suddenly go away. I mean, it's a great company. I mean, I probably in this room here and among your room, there's probably 10 or 15 Apple devices, right? So not going away anytime soon.
Yep.
All right. What other people did think was going away was biotech. They were in the doldrums. Too many companies got founded through the COVID days that were science projects. But what we saw was more mergers, more money, and takeover premiums coming back. We were dead right with this call. XBI, which is the biotech index that has smaller companies, and the IBB is the one that is the NASDAQ, bigger biotech companies, both up more than 25% on the year after selling off. Like, we nailed this one. I think this is the one I'm most proud of and most happy about because of I love focusing on this area of the market because it's a double bottom line, just like Jonathan Faison said. You're helping fund companies that could return a profit, but then also cure really nasty diseases, right? So giving people life or extending life, not bad when your investment can help contribute to that.
And I know we're doing our predictions, at a later date, but, biotech for 2026, still feeling bullish about that. Love
it. Still think there's a lot of ways to go. I think this is, trends that just because we turn the calendar to another year doesn't mean all these things that are working all of a sudden stop working. And I think that's the key point. You mentioned it, you teased it. We're going to have a predictions episode January 5th of next year. We're going to come out with our 6 top predictions for 2026. That's why we're going through our big predictions of 2025 to give you reason to believe. Biotech, it'll be back again. What about small caps? That was the other one. I was banging the table so often on small caps and was early. And as one friend always points out, early has the same number of letters as wrong. And I was wrong for a while on this, but no, small caps bottomed. IWM, even microcaps, the IWC. And we saw it coming again, data driven. Remember this chart? No Wall Street love for you. And it looked at microcaps and small caps and the average number of analysts that cover these stocks, the percentage with absolutely no coverage, and how they perform over the long term. This is the last great bastion of opportunity and alpha for everyday investors. And I think that's what we're figuring out this year. A lot of these big winners this year have been in the small and microcap space.
Yeah. Small caps have definitely finally turned around and done.
Yeah, well. And this because you've been investing with me and you've largely done your thing, but it's also small caps and microcaps. So you live by the sword, you die by the sword. It's painful when they're out of favor, and it was it took 4 years before they hit a new all-time high, right? So it was 2021. It was almost 4 years in between all-time highs. So it was a long slug for small caps. So, all right.
And you never gave up on them, Lou.
I didn't. The little engines that could. All right, let's focus on what we got wrong. Totally screwed the pooch on.
Nah, there was nothing wrong.
Yeah.
We didn't do anything wrong. We don't do wrong, Lou.
Son, if we ask our wives, they'll tell us that we do plenty wrong. I can guarantee that if we've got them both on.
Luckily, we didn't
right
invite them to the show today.
That's right. No, listen, this is a funny thing, right? It's atypical on Wall Street to be humble. This is actually a chart that I love that we did, is what CEOs say sorry, that they were wrong. Use the words, right? Look at this. We're talking about the number of mistake words that appear in quarterly reports and shareholder letters. It's very negligible, right? Like Warren Buffett and Jamie Dimon kind of top the list here. But like if you just look across, it's not a lot. Guys don't like to say, hey, I got it wrong, but here's why I think we're going to be right, or here's what happened. But we're going to do that. Yeah. Starting with Bitcoin. We told people when we got convinced by Anthony Pompliano and other Bitcoiners that it was the sign of the top. We were the latecomer, the sucker to the table. We bought into the seasonality that Oktoberfest was on its way. And Bitcoin did have a big rally, but then there was a huge risk-off moment. You saw a lot of altcoins get liquidated, so it just took the momentum out of the Bitcoin and crypto market. I can't remember the exact stat, but it was something like 2 million crypto traders got completely wiped out in that freak sell.
30, like just no time at all, just gone.
Yeah, gone.
I think that, Lou, honestly, probably just scared so many people, especially, you know, on the retail, you know, investor side, that that's, you know, that'll do it, you know.
Yeah.
Luckily, I'm still not invested in crypto. I don't say luckily, but you know, maybe someday. But you know, that definitely, you know, gave me pause.
Yeah, well, now's the time to buy, my friend.
Yeah.
If it's down and out. But no, look, you play stupid games, you win stupid prizes. You buy these coins that absolutely have no utility, no real world value, and you use 20 to 40 times leverage, you deserve to be blown up. Like, I'm sorry, maybe that's a little callous, but it was a necessary gutting of that sector of the market that's going to really, I believe, over the long term, you'll see Bitcoin, Ethereum, maybe Solana, a handful of these cryptocurrencies establish themselves as the dominant players that get used, and price goes up just because of the supply versus demand imbalance. So we were wrong about Bitcoin. We timed it. We were the classic example of hot dotting and chasing performance, and we jumped in right as the market essentially topped.
Would say maybe, you know, there's a few more weeks left in the year. Maybe it'll turn around, but I don't think it's going to go that fast.
It could. I mean, look, this is one of those assets that doesn't, you know, the trading never stops. It's open 24/7, 365. Not saying it's out of the realm of possibility, but I'm just owning the fact that we timed it really terribly, but not bailing on it. I haven't changed my mind that I don't all of a sudden believe in Bitcoin again. I still believe in it. I think it's just going to take some time.
Still there. It's just the value at the moment.
Yeah, energy. I watched Landman. I switched jobs, changed industries. I should have. God, it hurts to admit it. I was wrong, and Jim Cramer was right. But it was, man. You know, he came out, made this bold proclamation maybe 3-4 months ago that he sold everything, oil and gas. You know, the energy sector as a whole, I think, was up a middling like 3 or 4% this year. So it wasn't a total loss, but I expected a much bigger boom. So I'm going to own this as a loss, right? We was wrong about it. I think you're going to see in the next 6 months, the stage is set. And we had some interviews with Rick Rule, which got a lot of attention, and from the guy from Bison, who is saying, like, look, gold usually moves first, then silver and copper and oil follows next. So you've seen huge runs in those commodities. I still think oil is going to work out, but it just didn't work out for us this year.
Yeah, Chad Towers is typing right now. He's typing his message right now. One's coming in. I know it.
Dude, that's the best comment ever, because yes, Chad and his loyalty and support with us at Prairie, I got to give him a thanks for that. I am confident of what we're doing. All great guests. There it is. Get you some more followers. Big value from the big skinny is my call. Chad, we appreciate you. You better stay tuned for later in the show, because there might be a special shout out for you, Chad. Hood, yeah, Robinhood, I haven't really bought into this yet. I mean, I missed it. It's one of those things where you see the stock running. I get why it's going. I just hate chasing things. And I felt like Robinhood got caught up in just this retail trading boom and would switch from crypto generating the most of its revenue to equities and margin. And yeah, I missed it. I mean, I missed Hood. So add that to the list of bad calls. I didn't say buy Robinhood. It was an obvious buy.
Yeah. We didn't.
Yes, Chad winning for comments of the year. Kramer's such a knucklehead. Thank you for not getting shaken out of prop. I'm hopeful and personally invested right alongside you that it is well worth it. So join the conversation. As you can see, we're letting the audience share questions, comments, criticisms, everything. We take it all. Cue up the Pat Benatar. Hit us with your best shot as we continue reviewing our best and worst calls of 2025. And then we're going to get, in a moment here, as we go through in the last 10, 15 minutes of the show, I think we got some awards. And Chad, you should stick around for that. Instead, let's go to, a bad omen was me saying, I don't know why. Like, people think I hate Elon Musk, that I just want to see him fail. You
just want him to follow you on X.
I do. I just want him to follow me on X. Elon, if you're listening, or anyone has it. But look, my dig against Tesla this year was that everyone was parading them out to be the future of robotics, humanoid robots. This was the trend, and it's just a one-trick pony still, just like Meta is an advertising one-trick pony, just like Amazon was for a long period of time simply logistics before AWS launched, and even Apple was a one-device pony. Tesla, generating 85% of revenue from electric vehicles, does not make it a humanoid robot company, especially since the other 10% ish comes from solar panels and their batteries for grid storage and behind the meter storage, and they generate literally $0 of revenue from robots. But lo and behold, I was wrong. Tesla's done pretty well this year. It's not had a bad year. The future is promising. Everyone's buying into the hype of humanoid robots, and that's what I'll give Elon Musk credit for. Always have. He is an incredible salesman. He followed Glenn Ross. Always be closing. He's convincing, right? His timelines might be off, but he gets people to buy shares. I'm just not one of them.
Best scene of all time, Glenn Ross. Yeah. Always be closing.
Steak knives for you, my friend. Steak knives. All right, CoreWeave. We warned about IPOs, and we use CoreWeave as kind of the poster child, right? Historically, IPOs are a crappy investment for everyday investors like us that don't have access to the IPO price. You look at this performance chart. The key thing here to take away is just to see that when you get out 5 months and 1 year, about anywhere from in that time period, more than 50% of companies that come public are down, trading below their IPO price. So that's usually when I like to get interested, when the company's been in existence for 6 months to a year. You get past the insider lockup period, and that's where valuations get compelling. We suggested that CoreWeave would face a similar fate, and the thing just went rip-roaring after it came public. And yes, it's pulled back considerably since then, but I want to say it came public at like 38 and somewhere around the 40 and ran all the way up to 90. And yeah, we were wrong about CoreWeave. And look, I think they're being a major player now in that whole AI energy trade, even though they're operating as a neo cloud. So they're trying to do all things and integrate as much as possible. To be determined. It's not in my portfolio right now, but it's back on the watch list after missing out on a big run for sure.
Well, if I do my math, there was 8 things that we did right and 4 things that we did wrong. Not that there's not more on either side, but that we
were right about cybersecurity. We were right. Yeah, you're right. So we were right about more than we were wrong. And I think that's the balance that matters, right? And here's the other thing. As investors, remember, you don't have to be right all the time. You could be a Hall of Fame baseball player and only hit 3 out of 10 times, right, that you step up to the plate. It's the same thing in investing. As long as you don't put all your investments into one of your highest conviction names, you can be wrong more than you're right and still come out ahead. The good news is we're right more than we're wrong, at least for 2025.